Hello and welcome, as it is the 30th day of July 2017. My name is Derek, and let's take a look at gold in several different currencies. And I was going to entitle it something in the area like gold has been going up because the US dollar and the Swiss franc suck, or something in that level, because there are big differences. We look at the United States dollar. It's had 3, 6, 7, 8 or so days now above this rising 18 average in a nice bull market. And with the Swiss franc chart, it's just skyrocketing the last 3 days within its moves. And well, the reason the United States one is going up so well, we can see with their index. And it gives us a pattern on the daily of it going down and down and down all year long, and especially since the middle of June, as it has fallen a little south of 98, now heading towards the 93. And its technical analysis is stating we could have another leg lower, and it could be pretty decent. In fact, usually within these, I like this 18 average as correctionary phases, and boy, right here, here, and here, but not here. And as far as the pattern is concerned, after this leg lower, it rallies to a lower high, and it's falling right at the area of where it came from in the support mark. So as it has had so many times when it has retested these key support marks, well, here it succeeded, here it didn't, here it didn't, and we'll see now if it's going to succeed this one. But when you have the situation of having very little of a correction, meaning you can't make it to the band because you can't rally far enough or long enough through time to get there. The dollar on the weekly chart, well, it's pretty much right back to this area of support. It has entered into that area. You can say, well, it's due for a bounce, at least to come to some sort of lower high on a longer term time frame, maybe. Usually. If that's not the case, you can expect a fast move to continue lower, but that's if, of course, that doesn't happen. And it could just go sideways in here for a while, but that's the US dollar chart against other currencies. We're looking at gold here. And the message of the US market is this long sideways consolidation for the entire duration of the year 2017, making a lot of choppy moves, having several support area around 1220, and having several resistance area at the area in which it's approaching now, but it's rising from its level. And let's move on to so many other ones. Let's go back to the franc. And it's a chart that you could consider it to be a choppy mess, but the situation here, you had the sideways move within the band as the flatten out. Now we're looking to establish resistance. Usually I like to go up to about here, but this thing has just kept on going up to this previous area, breaking through this major level of resistance as well. So this is a statement move within the Swiss franc. Let's go to some other ones because they have much different looks to them. This is gold priced in the euro, which has been in a downtrend, not since for the year, but since April. It is resisting the very low levels from the end of last year. It is currently going sideways majorly, or for several periods within the last little while, finding resistance a little above the 18 average of highs, finding support originally at the 18 average of lows, but further momentum looking to go higher, or it's at least stating that it looks to be ready to establish a level of resistance, which just quickly looking around 1118 seems to be a significant area. With the Aussie dollar, we see a market that's just trying to end the downtrend and also trying to break through this level again in a downtrend, not since April, not since the year, but since June in this case, as it made a high not seen since the election levels. and then has made a low relatively close to the 2016 ones. Let's move to the Canadian dollar next. It's very similar to the Aussie dollar, but it's been a little more flat within its band, also trying to state or make a statement that it is ready to revert the trend and establish a level of resistance. The pound sterling is very close to going to bullish territory. Step 1, flatten the band. Step 2, establish resistance. Step 3, come back. Step 4, break it, and it's pretty close to it. You need to clearly break it, so I need to see it go to at least around 970, but it's on the doorstep there now. The won renminbi, it's just completed step 4. Step 1, flatten band, establish resistance, come back to support, and then break it. So it's bullish on this currency. With the Japanese yen, a lot different of a story. It's trying to break out from in here, but this is a 1-year sideways consolidation for the year 2017 after a fall rally. Within the Indian rupee, it's also in a sideways consolidation, but not after a gain, after a loss. And within its current movement, it's also moving bullish, establish resistance, come back to the band. Well, it's now just breaking it out. So gold bullish in here. Looking to now make a move up to the 83,000 level, I would say, as its next resistance. Also breaking out in the Hong Kong currency, as it's looking to make a move up towards the 12,000 level. With the Rand, it had a very interesting move that concluded the end of March, has been in this sideways consolidation, and has broken out past this 18 average up to this previous level of resistance. We'll see now if it's ready to break it, and of course short-term supporting this previous area here would be very important. And the New Zealand dollar, after the big fall that occurred at the start of June, it has been consolidating for quite some time. Band is flat. It has to go higher than this close to 1700 level to establish resistance. I'd be looking for an area up towards here, but a lot of these other currencies are in great bullish or breakout facets, and some of the other ones like this are in not. But there's one more that's like a currency, not really, but is, and that is silver. It's the ratio, but it, quite frankly, is the same thing. This is how many dollars you need for 1 ounce of gold. And it currently costs a little over 75 at this stage to get one, which has been obviously in a uptrend since the month of March. Now let's expand these time frames and move this to the weekly time frame. And it's relatively choppy, to say the least. So let's expand it some more. Heck, we're back to starting to 2013. I wouldn't mind seeing a even longer term perspective. And for the decade, the millennium rather, it has been, well, between really 50 to about where we stand now, close to $80. There was a brief moment when gold was really cheap to buy, but that was a very brief moment. A major level of resistance has been established roughly around 84, but it has to be taken out before you can, well, have any type of significant moves. But overall, the price of gold has remained neutral for the entire decade, at least priced in silver. Let's go to the other currencies in this time frame. In the US dollar, it has been in a major uptrend from around 2001 up to 2011. A very much sideways move has been persistent the entire run as it stands. And unfortunately, the TradingView website is limited in data. It doesn't really go back much before this period. But we'll take a look at it from this perspective on the weekly time frame. This is in the euro, showing its sideways, really choppy consolidating period right now since its 2014 low. Aussie dollars, pretty much the same thing, although trading in a very middle part of this overall close over 1/2 decade sideways correction. Canadian dollar, really not much of a difference compared to the Aussie. The pound sterling bottomed much later within this period, having further consolidation towards its 700 level, not bottoming until the end of 2015, but from that point having a very fast recover, at least in comparison to other currencies, and within its sideways range as well. And the Swiss weekly chart really paints an interesting picture. I mean, what happened at the start of 2015? Really? Interesting flash crash. And it's having this great move I showed on the outset of all these straight days up, and it's just getting recovery moves back, and there's still more left to go, as a lot of these charts are up in the middle 3/4 end of its sideways range. The Swiss franc is, well, now pretty much around the halfway point of it. The won renminbi, it had a situation of extended down period into, well, the end of 2016 as well. It, at this 7,900 level, has been supporting a previous level, but it too is nowhere near a half or 3/4 part of a larger retracement like the other currencies, like the Aussie and Canadian dollar as an example and such. The Japanese yen, much different than those other ones. Up move and some sideways consolidation, pretty much in the middle part of its sideways move at around the 140,000 yen level. And I'm going to put the final one up as a Hong Kong dollar, which does have more data. So I'm going to put the monthly chart, but it also shows you within its correctionary move that it's too going sideways. It also is like the US dollar more in the lower end of its point. But what kind of message have I gotten from this type of market shown in multiple different currencies? Well, not counting the gold silver one, of course, but with all the other paper digital fiat currencies, they are showing signs on the daily chart of being bullish or wanting to become bullish. And the signs on all of these more longer term time frames has been a multi-year sideways correction, because every currency experienced this at the start of the 2000s, which was gains. Every single one. So they've all had the gains and they've all had the sideways action. The market's correct either through one and or two ways. That's through price or through time. And for the most part, that's exactly what it has done. Long time is just correct in the time manner. But I say and or because you have a price correction, then you have a time correction. And then you have a decent amount or whatever, however long it takes. Bull market starts to get going and you get basically what you'd call a parabolic bull market, like was the case when it got going in here. And then when those cases, the buyers go in control in all these markets, you get several green candles on the longer term and of course all other shorter term time frames. And that's to be expected at some point. And in the daily charts, they're stating breakouts. That's not stating this thing is going off and we're ready to bottom here, test and break this previous high. By no means does that state that, but it does state that at least within these moves that have been going sideways, it's ready to test in every currency some higher levels amongst its sideways consolidation. And if it can break those points at post that situation, post that move, then it would be ready to start talking about a more longer term bull market, of course, in the price of gold on a global level. And fundamentally, so many reasons to support that case as well. Thank you for tuning in and have yourself a great day. Bye-bye.